Good day and welcome to Asset TV Roundtable. I am Zama Zulu Zulu. For today's session, we are going to be discussing the topic on custody-driven models for investment administration. And to unpack this particular topic, I'm joined by three experts on it. So first up to my right, we've got Adam Bateman. He is the Head of Business Development and Strategic Partnership Investor Services at Standard Bank. In the middle, we've got Siyabonga Mthalane. He is the Investment Manager for Research and Performance at the Government Employees Pension Fund. And last and not least, we've got Johan de Bruin. He is the Head of Fund Services, also from Standard Bank. Gentlemen, welcome. Lovely to see you and to meet you in person.
Thank you, Zaba.
All right, so in terms of custodian banks, because that's really what we're going to be talking about today and some of the services that they provide, one of their primary roles is to safeguard or safekeep financial assets for various clients. And the other role that they also fulfill is to provide value-adding services, administration services to retirement funds. And for the purposes of this conversation, we're specifically going to be focusing on those investment administration services provided to retirement funds. So maybe, Adam, let me kick off with you. Can you just perhaps share with us what do these investment administration services actually entail, and why would a pension fund or a retirement fund utilize a custodian bank for these services?
Sure, thanks, Emma. Typically, when a custodian is involved with investment administration, the cornerstone of that service is investment accounting. So a full accrual, trade date, a double entry accounting service is provided by a custodian. And then off the back of that data set, a number of other things can be leveraged. Things like mandate monitoring for compliance in terms of what the asset manager is allowed to invest in, the things the manager is not allowed to invest in our market, Regulation 28, and then performance and risk reporting. So rate of return reporting against a standard or customized benchmark, attribution analysis, et cetera. The custodians, if you look at why would a custodian get involved in this part of the investment cycle? And really the quick answer is a lot of that data is already resident in the custodian systems. So it's part of the role the custodian plays in settling trades, safekeeping assets. A lot of that reference data, valuation data is already there. So it's really just a matter of enriching that data and providing these additional services. It's that, and combined with sort of the ability to bundle services that make it attractive for an asset owner, a pension fund. A standalone administrator isn't able to bundle a service with a banking product. Custody is a banking product. So it brings a lot of efficiencies by being able to bundle custody with these investment administration services.
Okay, great. I think that's a good place to start. So thank you for unpacking that. Sia, let me come to you now. So you work for the GEPF, and the GEPF does utilize these custodian investment administration services. What were the main drivers that led to the GEPF deciding to utilize a custodian for those services?
Yeah, thank you, Zama. The GEPF took the decision to use the custodian for investment administration services very long time ago. That was even before my time at the GEPF. So in terms of the key drivers, I think if one thinks back in 2009 when the GEPF office was formed, it didn't have the resources just in terms of manpower as well as technological systems to be able to run its own investment admin services. So it made sense at the time that the GEPF outsources these services. But also what is also important is that the fund didn't want to be burdened by admin. It basically just wanted to focus on things that matter the most. And basically that is, taking care of the interests of its members.
Okay. All right. No, that makes a lot of sense. And then, Johan, coming to you. So from your experience dealing with various pension funds as, you know, as custodian bank working for Standard Bank specifically, what are some of the challenges that you've identified that face some of the clients that you interact with?
Yeah, I think, as Sia said, the pension funds normally have a small team supporting them. So to be able to manage that large volume of data, the ability to source that, especially when you look at some of the regulatory reporting, you need a lot of drill-through information to understand the underlying investments in those pooled investments. So managing the data, keeping the information secure, safe. Also, technology is expensive. When you look at that, platforms are expensive, your data cost becomes expensive. And also, when we look at the complexity of the custodian and asset manager environment, some of our clients are small in SA, so they would work with one custodian, about 15 or 20 portfolio managers. But then you can have a client that's got large 3 custodian relationships and upwards of 85 different managers. Yeah. So I think if we look at those complexities, we can assist them. Outsource business model, we take the pain away.
Well, and sort of as part of that, we're able to standardize all of the accounting frameworks, the valuation methodologies, by having one firm, one bank, one custodian provide these investment accounting services across all the portfolios. You're able to achieve a level of standardization that wouldn't exist if each manager was producing their own set of reporting.
Yeah, and maybe just to add what Adam was saying, is we've also got a relationship with a lot of the asset managers. They're using us in the settlement process. We can get that information from them or their administrators, and then we provide that independent building of that record, and then also a lot of data scrubbing, making sure that the valuation policies can be aligned to, as well as the pricing policies as requested by the client.
You mentioned something interesting earlier, Johan. You said some of your clients utilize a number of custodians. Does that work for you though? I mean, so let's say you've now pitched for a contract. Would you prefer to be the sole provider, or are you comfortable? Because what the key message that I got from you, Adam, is it's all about standardizing. Now, how do you standardize when you've got various other parties in the equation?
No, correct. And normally our business is on the back of a domestic custody relationship. So in South Africa, we're the domestic custodian. The other custodians are the global custodians. Standard Bank don't play in that space. We utilize global custodians, and that's where the multiple custodians come into play.
Okay, all right, I understand.
So it's also always on the back of our direct custody relationship, and then our network into the global custody world.
All right, so maybe just to clarify, so in that situation, you would still be responsible for the local piece, and then whoever's taking care of the global piece will do something completely different.
From a global custody perspective, they will take charge of that. But from an accounting perspective, we're the single point of contact for the client. So we consolidate across all those custodians to create a single record. And that's our value proposition.
Okay, then that's
the ability
interesting.
to consolidate across multiple custodians, multiple markets, multiple asset managers.
But creating that accounting record from the ground up. So we're not taking asset manager reports and consolidating, nothing like that. We're constructing those accounting records from the ground up and then reconciling those records to the asset manager, to the cash and securities that sit with us as the custodian, and then producing a report that shows those differences, because there are differences. We call that a three-way reconciliation. That's quite important to ensure the integrity of this accounting book of record we're creating. In effect, we become the golden record for the pension fund. It's our records that are used typically used for the general ledger of the pension fund. It's those records that inform all the financial year-end reporting for the pension fund. And that's a key component of how a custodian can feature in terms of the investment reporting.
Yeah, Zama, so maybe to add to what Adam was saying, our clients use our information in two ways. The one is as a independent check against the records that they use, and they then do the investments that flows into their financial year-end records. And the bulk of our clients use our investment accounting record as the golden source that feeds their financial statements. So we create that journals that is passed into their corporate ledger, as well as assist them with the financial disclosures that they need. And then lastly, from an external audit perspective, we're also involved in the external audit on behalf of the client. We cover all the investment-related accounting queries, and then obviously the fund does the rest.
Yeah. If I may add on that, I agree with Johan. From the GPF point of view, so we are obviously involved with many service providers, especially various asset managers and so on, who all of them will send reports to the GPF. And from our end, we also just wanted an independent third party to do the numbers for us in terms of the investment reporting, so that we can compare what we get from the asset managers with an independent report and see if there are any discrepancies and so on. So that's one area in which it has been useful for us. But also, you don't want to be dealing with a lot of service providers, man. So in our case, having that central point where we know that this is where we have our investment accounting, investment performance and compliance and so on, is very convenient for the fund.
Okay, well that's good to know, because now you're actually giving us the practical aspect from your experience as the GPF. And just out of interest, when there are these discrepancies between what you've received from an asset manager compared to what the custodian has provided, how do you then go about handling that?
Yeah, that's very important, Zama, because it means there's a problem somewhere. And then the key thing to do then is to figure out where the issue is. So we'll engage both the asset manager as well as Standard Bank and try and figure out where the discrepancies are coming from. And of course, I mean, once you identify the source of the problem, that's where you probably identify the issue, and then you'll have to respond to it. But I think what's important is that there's a mechanism to be able to identify that there's a problem somewhere, rather than taking a report as a true gospel and then only to find in the end that there was an issue.
Okay. All right, so we've actually spent quite a bit of time just unpacking, because one of my next questions was actually to just ask you to add if there's anything else, in terms of how the pension funds, how you are assisting as a custodian, bank representatives, yourself, Adam and Johan, how are you helping pension funds actually navigate this world? Is there anything else? Because I mean, we've touched on quite a lot already. Is there anything that maybe you'd like to mention at this point before we proceed?
I think maybe just the one other aspect is I think we mentioned a couple of key aspects. The one is that verification of the market prices for your listed instruments, making sure that the actual price is consistent and used according to the client's mandate. That three-way reconciliation that Adam spoke about, that's key, because that identifies all the issues that CR raised. And then lastly is that consolidated independent accounting record then flows into your regulatory reporting mandate reporting process, so like Reg 28, and the same accounting record is then used for the performance measurement as well. So you've got consistency of the data flowing through, and then the audience of the pension funds is not limited to the pension fund principal officer and their staff. The asset consultants and the asset administrators also use our information with the permission of the fund. Yeah.
Okay. You mentioned listed assets, Johan. Are your services only limited to the listed piece? Because I'm just thinking as per Reg 28, you can have infrastructure, all the other unlisted asset classes.
No, definitely not. So I think this is where the enhancement and augmentation comes into play. So anything that is non-custody assets is sourced from different sources. Being the asset manager, we get information from clearing brokers, etc., and we build that full record for the client. Some of our clients also invest in private equity, direct property investments, etc. So every little investment that the fund makes is part of our investment accounting process. And then we agree with the client the sources or the people that can provide us an accurate valuation for those non-custody or unlisted investments. Yeah.
So Adam, let me come to you now. Are there any alternatives out there for any retirement funds that do not wish to make use of a custodian at all? What happens in that situation?
Okay, so there is no alternative to using a custodian for holding assets in settling purchase and sales. It's compulsory to appoint a custodian in that space in South Africa. From an investment administration perspective, I would say we are positioning these custody-driven models as an alternative to more of the standard model that's existed here for many years. And that model is typically a model where an administrator, whether it be an in-house pension fund or one of the big pension fund administrators, employee benefit administrators, kind of the standard model typically is that they will put a lot of this information together using fund manager records. As Johan said, some of these funds can have well over 50 different asset managers, different mandates. And what's happening there is they're consolidating information that's coming off the back of different platforms that are being used by different managers. None of them are wrong. They're all absolutely correct, but they're not consistent because each manager will have their own systems, sometimes different accounting frameworks, different valuation policies, slightly different anyway. And historically, that's really been the model here in South Africa. And it's only been the past 20 or so years that the custodians, not just Standard Bank, but other custodians here, have got involved in the underlying investment administration off the back of the custody records. When you compare that internationally, you see the custodians getting into this game, 50 years ago, with the creation of the ERISA Act in the U.S., the Employment Retirement Income Securities Act.
Is that what it stands for?
Yeah, that's what ERISA stands for, 1974, I think. But at any rate, that act made it mandatory to have an independent master trust / custodian to construct all of this book of record. And what's happened over time in places like Europe, Australia, and other places, if it hasn't been legislated, it's certainly commonly referred to as best practice. We're not there yet in South Africa, so I think what we're talking about today, largely speaking, is an alternative model for this market to what the standard is.
Okay, and I'm assuming because you are working for a custodian, you would like it to maybe become mandatory at some point, surely like it has in some other parts of the world.
Yeah, we would welcome that.
Yeah, I'm sure you
but
would.
we would like to see a higher sort of subscription into these services through the funds here. The services that we're talking about aren't appropriate for the thousands of pension funds that are in South Africa. I've lost track. At one point we had over 10,000, I think, registered pension funds. So there is a kind of a size of pension fund. It kind of leans more towards the medium to larger funds in this market. Currently, the way we're able to scale up, we're able to scale it up quite a bit, but these services aren't appropriate for every retirement fund in South Africa.
Sure.
So.
Okay, and you just said, because that was a question I was going to ask you later in terms of the typical sized clients that you would target. You said medium size. I mean, what's medium? Is there like an AUA number?
Yeah, typically we draw the line somewhere around 3 to 4 billion rand in size of funds. There's no magical number. We've had, You know, and we've had a couple of clients in our business that have been well below R1 billion
Oh,
over the
really?
years.
And it still makes commercial sense.
It does to the client who's purchasing the
Sure.
service. Now, granted, those are multinational clients who have come in
okay.
that are running pension funds here locally that are used to a custody-driven model in places like the US, for example. And that's probably been the main driver for those smaller funds subscribing to these services.
Okay, all right.
I think maybe just to add to what Adam was saying is we're also looking at the clients from a bank perspective. So not just from an investment administration perspective. So from that perspective, we can balance the service to the client in terms of what's the overall services bundle that we can deliver to the client. And that could then make commercial sense.
Oh, okay. Okay, no, then that makes sense to me. All right. Is there anything that you wanted to say, Sia?
No, I wanted to
Looking at
say
me.
that, I mean, we've been with Standard Bank for a while, you know, receiving these services. So if they can handle a client of the size of the GPF, of 2.3 trillion rands, I guess they can handle anything, you know. So.
Yeah, no, I agree. So essentially what you are providing in these investment administration services, you're basically competing with the employee benefits, the in-house, let's say. Have I the administrator? Is that correct?
I wouldn't want to position it that way.
Okay.
I think the kind of the core service that the employee benefit administrators offer are largely focused around the members. So it's making payments to pensioners, keeping track of all the underlying members of the fund, the collections from the employer. And that's really the core service. We don't get involved in anything of that nature. Custodians, when I say we, custodians are very much focused around the investment life cycle, the investment side of the pension fund, not the members. Okay. But what's happened here is over time, and it might be a function of the banks historically, if you look way back, not being in a position with systems and the like to get involved in what we call investment administration. So almost by default, at least this is my take on it, the employee benefit administrators found themselves getting involved in these kind of activities. In fact, Johan mentioned it earlier. We worked with a couple of funds that also the employee benefit administrator, the pension fund administrators, are involved with the actual construction of all the financial reporting, but they use our records. And they seem to be really pleased when we're involved in that way. So we don't really see ourselves as competing against pension fund administrators.
Okay. Thanks for clarifying that, because I'm just thinking, for a pension fund representative who's watching this particular conversation and they're thinking, well, they've already got that sorted in-house, would they need, something externally? So it's good to know that at least, it's what you're offering is actually slightly different from what your traditional employee benefit administrators would be doing. Okay, so thanks for
clarifying. And I think the key thing there is just that concept of independence, producing that independent reporting, monitoring the activities of the asset manager from a compliance and a performance perspective. That's kind of the real value proposition that a custodian can bring to this space.
Johan, so can we maybe just unpack some of these operational activities, please? That we kind of glossed over, but maybe if we can just unpack some of them.
No, certainly. I think everything starts in the front with our data team. So you need to make sure that your static data is correct in terms of all the instruments that you need to set up. Static data differences can cause valuation differences, cause reconciliation breaks. So it's the standing data maintenance is one of the key aspects. From there, it's the pricing and scrubbing process, making sure that you identify stale prices, variances, make sure that we identify what is the variance, is it a correct variance, etc. Then it comes to the actual construction of the record. So that's sourcing the data from the custodians, from the asset managers, from the clearing houses to create that book of records with a cost for the fund, so you can build up the average cost. You can track your unrealized revenue. Reconciliations is key. Our 3 key reconciliations is accounting back to custodians, basically from a holding as well as a cash perspective, also back to the managers, and then making sure that your investment records and your trial balance and your journals also tie back. And then once the transaction's been processed, a lot of time spent on the oversight, making sure that the reporting for the clients are correct. That could be monthly, quarterly, annual, our financial year impacts for our clients and their auditors, dealing with the client audit queries, and then finally that then flows into our compliance and mandate reporting and Regulation 28 processes. The big piece of work is classifying instruments and getting the look-through information to so that you can satisfy the Reg 28 requirements. And then obviously it goes into the performance reporting process. But I think that's our operational processes in a nutshell. Yeah.
Okay, no, great. No, it's actually good to kind of hear all of those parts of the process, because it kind of gives you an idea, okay, this is really what is entailed in the service offering that you provide. I'm just curious about customization, because we haven't discussed it. So, I mean, Adam, earlier you mentioned that, medium-sized pension funds, that's really your target market, and anything larger than, you say 3 billion at least, assets under administration. Yeah, right about there. Yeah. To what level are we able to customize? I'm just thinking GPF, for example, is one of your clients. They might have specific requirements. To what extent are you willing to do that?
Well, I don't think we have any 2 mandates that are completely alike. So we provide a very high level of customization. Each client has a different set of requirements, but kind of a very specific focus, the service that they're interested in. And you could argue to some extent, I would say to our detriment, we've over-customized. And so banks are always looking to standardize as much as they can. And in a perfect world, we'd have kind of 2 flavors, maybe just 1 flavor, but that's just really not all that possible, the type of work we're doing. And it really is client-driven.
Maybe just to add to that, so I think that's a challenge in terms of the smaller clients. You can really get away with a standard solution, but the larger clients need customization. And that's where the focus is, in terms of how can you get the scale so that you can customize through configuration rather than manual customization. And I think that's the historic challenge that we all face. And then how do we use the technology to move to the configuration?
And it becomes important, Zama, especially for a larger pension fund, which tends to have complex assets in its portfolio, things like your private equity, hedge funds, and so on. So you need that level of flexibility from the provider to be able to actually to cater to your needs. And I think our experience with the Standard Bank at the moment actually has been quite useful for the GPF in that regard. Okay,
well that's good to know. And then, in terms of umbrella funds, do you provide these investment administration services to umbrella funds? Do they apply?
Well, in theory, yes. They absolutely could apply. I'm not aware of any custodians in South Africa that are providing these services to umbrella funds. And I think that's largely a function of the umbrella funds having less sort of listed assets. A lot of them tend to invest more into product, whether that be life-back pooled products or collective investment schemes. So the value proposition isn't as strong when you have a fund that isn't as invested into, direct JSE equities, bonds, etc. And that's probably that would probably be the main reason why. Certainly we haven't taken on any umbrella funds, but in theory, absolutely, services could apply to any retirement fund structure.
Okay, well, that's good to know. And then the other important point, fees. I'm just wondering, is there maybe a range? Because I can imagine, I mean, you can't be charging the same fee to a 3 billion rand client to, you know, one that's has much higher assets. Is there a range that is applicable for the industry when we look at these types of services?
I don't think there's a range that, in the industry, but normally it is a basis point fee on assets under administration for the core accounting function. And then when it comes to reporting and performance, it becomes bespoke because performance also depends on number of mandates, number of benchmarks, because there's also underlying benchmark data costs that is associated with that, yeah.
Okay, all right.
And obviously then it's a bundled fee with the broader custody business, yeah.
Okay. And I'm assuming everything is always negotiable, right?
Oh, absolutely. Absolutely.
I'm just putting it out there.
Absolutely. And as Johan alluded to earlier, it's also, I think, a function of, well, I know, it's a function of the bank's wider relationship with that entity. You know, even though the pension fund is a separate legal entity to, say, a corporate, the bank will typically look at a wider relationship that spans into the corporate, the history of the relationship. So we try our best to price holistically, that's for sure.
All right, I know we're getting close to the end of the session. So you mentioned earlier, I think it was you, Adam, right at the beginning of our conversation, where you said, you know, there's been a lot more activity in the investment administration space globally. And it's relatively new in the South African market, so it's definitely gaining traction. How would you like to see the South African market evolve? What would you like to see happen? I mean, we discussed, I mean, I asked you the question earlier about the regulation, you know, making it mandatory. Is that maybe one of the things that you would like to see?
Well, I think, yeah, we'd like to see that. I don't think we're holding our breath for that to happen. When we look at our own business, it's probably best to comment on our own business. So we're always trying to make this business more efficient. We've got a big focus now on identifying other services that we can put under this umbrella term that we call investment administration. Potentially, for example, ESG reporting. There's a lot more we want to do in the unlisted space. With you know, private markets, private equity, private debt. There's a lot more in-depth reporting that we want to develop, and as part of all this, we want to achieve a lot more sort of integration with clients in their platforms. Call it general ledger systems that the pension funds are using, and allow those clients to use our data in a more efficient way, in a more interactive way. So these are things that are on our agenda, call it over the next 5 or so years. But generally speaking, what we'd like to see is, yes, a much bigger take-up in a custody-driven model for these types of services.
It's interesting that you mention doing a lot more reporting in the unlisted space, because that really ties up quite nicely with the changes that we saw take place with Regulation 28 a few years ago. So I think if we see a lot more allocations to those types of asset classes, then I think it will become an automatic evolvement situation for you.
Yeah, absolutely. And GEPF is, in some ways, is really leading the way in terms of pension funds in that space.
Yes.
And it's, you know, it'd be night and day what they're doing compared to a lot of the other pension funds.
Look, definitely it's a growing asset class. So if you look at some of the large pension funds in the US, they hold about anything between 20 to 40% in private markets. And I think that obviously some of the you know, developing countries like ours could be lagging in that regard, but I think over time definitely it will grow to something formidable, and it's important that you have service providers out there who are able to cater for that market as well.
one other thing I wanted to add.
I'll be with you just now, Johan.
All right, sorry.
We have a salesman here. Continue, Adam.
No, I mean, for us, so we operate throughout the African continent. And from a custody perspective, we have a presence in 14 markets outside of South Africa. So a very big objective for us is to advance these services in other markets in the continent. We do have some clients in East Africa, in markets that are closer to us here. But that's also very high on our objective list, is to develop and advance these services in sub-Saharan Africa.
Okay, no, that's interesting. So my last question, I'll pose it to you, Johan. So why Standard Bank? I mean, we've been talking in general about the custodian banks in general, but now, because you're here, anyone who's watching this particular episode and is thinking, maybe I should, consider this particular service, why should they specifically select Standard Bank?
I think when you look at Standard Bank, and I think Adam alluded to our footprint in Africa, our partnership with key global custodians over the past number of years, the depth and breadth of our services that we can provide to our clients, being the corporate clients, I think the parcel of services, the service ethic, the integrity of our people, as well as the will to service our clients in the most efficient way so that they can focus on what's key for the pension fund industry. I think in my mind, from a product and service delivery point of view, that would be the answer. And I think Adam probably wants to add from a sales perspective.
I should have asked you that question.
You did very well, yeah. No, it's a big business for us. We've been doing it for a couple decades now, and I think we can say we've got the largest platform. It's 3.9 trillion of assets that we support, and it's very much just focused around asset owners. So while pension funds are the core segment, we also provide these services to life assurance companies, medical aid schemes, etc. So yeah.
Okay, great. The gentlemen, thank you so much. We have now run out of time, unfortunately, but I think this was actually a really good conversation and something slightly different. And I'm hoping that our viewers would have found it highly interesting and valuable. And who knows, you may be in a position to get a few phone calls from potential clients who are actually quite interested in Standard Bank in particular, providing them with these investment administration services. Well, thank you so much to our viewers. I really hope that you found the session interesting and valuable. And until next time, goodbye for now.